Hey everybody, this is Jeff, Swing Trade Warrior with WarriorTrading.com. I am back. It's been a long couple month break for me that I took from YouTube. Not really sure why. I just kind of got out of the routine, but there's been a lot of cry and requesting for me to come back and start providing and putting out some more material. And so that's what I fully intend on doing in 2016. Starting with the recent release of Chapter 3 of my swing trading course that was taken last year, one of the live classes I did, I recorded. I've uploaded it to YouTube. You can find it on my channel. Take a look at that. That's just one chapter out of 5. We're going to share some things today that are out of a different chapter from that same course. But it's one of the most important things that I do as a trader, that every successful trader does. There is nothing more important than finding the right stocks to trade every day. And the way that we do that, whether you're a day trader or a swing trader, is by building yourself a watch list. Now, there's tens of thousands of equities trading every single day, and it is not possible for one person to watch them all. And so we have to use a technology to our advantage, whether it's scanners or or news feeds or a master watch list of some sort of stocks that you're familiar with, to help you keep an eye on all these things that are moving up and down every day. So especially as volatile these markets have been, there's still opportunities every single day to find good trades, whether you're a swing trader or a day trader. And we're going to go over how I build a watch list every single day so that tomorrow I'll have stocks to trade. Now, as a swing trader, we're looking for stocks primarily on a daily time frame. We're not really interested in intraday chart patterns so much as we are the daily chart patterns. So every stock that I look at is going to be on a daily chart. Sometimes we'll extend it out. We might look at it on a weekly or even a monthly time frame. But for our purposes, we're only looking at taking trades that last anywhere from a day or two to maybe a week. Any more exposure than that is generally not the kind of trading that I'm interested in. I'm looking at making my profits over a few days, getting some nice big winners. So that's kind of the focus of swing trading for me. I do build my watch list every day after the market has closed. That's when I run my scanner. I don't even open my scanner for swing trading until the market is closed. Why do I do that? Why do I wait till the market is closed? Because I want to know. I don't care what alerts on the scanner during the day. It makes no difference to me. On my swing trade scanner, if XYZ alerts at 9 a.m., that doesn't mean anything. I'm on Pacific time, by the way, so I guess that would be noon on the East Coast. It means nothing to me if it alerts in the middle of the day. I need to know where stocks closed at, and I need to know what kind of volume they were trading on. Because as part of my swing trading strategy, if any of you guys have taken my course, the swing trading course, you can find the link to it down below the description here. You will understand that we are only focusing on stocks trading on high relative volume. Why high relative volume? Because high relative volume means we're not the only ones trading it. If it's trading on volume that's higher than its average day-to-day volume, then that means there's other people interested in it for some reason, whether there's a catalyst in play, whether it's trading at a technical breakout area, or whether it's just an in-play name moving on sympathy with a hot sector. It doesn't matter, but we're looking for that high relative volume. We'll evaluate the why later on. Now, if you've taken my course again, you'll know that I use a hybrid strategy. I'm not a pure technical trader, and I'm not a pure fundamental trader. I am not either. I am a hybrid. So I'm definitely using important parts of technical analysis, and I'm combining it with some of the important stuff I've learned that works and has an influence for sure on the trading that I do on a fundamental side, and I put the two together. So basically, the whole purpose of this video today is to go through and show you how I build a watch list every day when the market closes that I send out, to my subscriber base at Warrior Trading. We have over, well over 1,000 members now, and every day they get an email from me telling them what I'm looking at, where I'm looking to enter the stock, where I'm looking to stop out of a stock, and what I think the profit potential on the stock is. And the only way I can do this is by thoroughly evaluating and doing my due diligence on the trade setups the day before. So there's never any secret on when or where I'm looking to buy or sell a stock. So having said that, let's get into taking a look at some of the scans for tomorrow. Now, I use a multitude of scanner technology. I use TC2000 for my small cap scans. I will use Trade Ideas over here for my mid to large cap scans. and I'll take a look at at everything that comes off of these scanners here. But primarily, I'm interested in the small cap stuff, especially in these markets. What do we know about small caps? We know that they tend to move less sympathetically with the broader markets. And when the market gaps down 40, 50, 60 points like it did today, there's really not much you can do to stay out of the way of that kind of movement. Every stock is going to get touched on almost every level, except for the ones that are moving up on very, very, very recent news. And those are the ones you day trade. You don't swing trade those. So we're looking at stocks here, preferably under $10. That's kind of the sweet spot. We're looking for stocks that have home run potential, that 5 to 20% range. They're trading on high relative volume, that have a good setup with a decent, either no negative fundamental catalyst or some sort of decent recent fundamental catalyst that might be the reason why they're trading on the high relative volume. I have scanners set up for my long scans and my short scans. And basically, it's just a process of a very repeatable process that I do every day. And I run down the scanners, and I take a look at the setups each day. I'm looking for stocks, small cap stocks, that have the potential to run anywhere from 5 to 20% over a period of 3 to 5 days. That's the sweet spot. So on average, we know that small caps breaking out will move 3 to 5 days in the trend. So if they're breaking out, it'll continue to break out for 3 to 5 days on average. And they will move 5 to 20% during that time frame. That is exactly what we're looking for here. We're looking for stocks that I think have that potential based on their chart setup, and based on any potential fundamentals that they might be moving on. So we'll take a look at the first stock here. It's going to be MTSI. MTSI is the first ticker to alert on the scanner. It closed the day up, or closed up on the day 4.01%. I do like this stock, even though it's not under $10. I do like the stock for a couple of reasons. If I zoom out, I can see pretty clearly that at the $38 area, the $38.30 area, there's quite a bit of previous resistance, and there's not really a ton up until $39.50 and then $40. Now, I'll draw this out for you so it makes a little bit more sense here. Let me get some lines out. So we can put a line there, put a line here over this high, and put a line up here. Okay, so what we see here, I'll zoom in a little bit here. Okay, so what we see is we got this top right here at 38.40. We kind of had this tap and break of it back in November. Then in December, we tapped that 38.40 area again. We did tap it one more time in middle of December. It broke out, ran to highs of about 43.19. Then it sold off very, very, very hard. Came all the way back down here. It's been trading sideways, kind of basing here along above this $34 area. It's been trading above the 200 moving average this whole time, which is this yellow line. It's also been trading just above the 50 and the 20 EMA in here as of today. So what we like here is we're getting this high relative volume move up. You can see today we put in 150,000 shares over yesterday's volume. So we got this high relative volume move today over these 50 and the 20 moving averages here, which generally moving averages will act to support areas of support and resistance, but we're just below an area of potential breakout here under 38.40. The only thing I don't like about this is the range to that breakout spot. So while this might be a good setup for a long entry over $38 here, and then maybe an add over 38.40, it does have an ATR of $2, which means that the average tick range or average true range of the stock in a day is $2.10. It does have the ability to break out and move to this $39.60, $40 area, but I don't like having to enter so far off of today's highs. So I'm going to take a pass on this for now and see if we can find a better looking setup. Not really super interested in this setup here. We have this pretty extended move to the upside. We did break through $20 here, but there's not a lot of room here to the upside for this stock. And let's see here, EBF hasn't traded above $20 in the last couple of years, so not really interested, in this particular price. AXON. Okay, AXON. It's going to be a biotech. This one there's probably going to be a lot of biotechs on the watch list today, mostly because the IBB, or the NASDAQ sector ETF for biotech stocks, was up today about 2.75%. 2 weeks ago, 3 weeks ago, IBB was trading at $345. Today it's trading, at 277. So it suffered a big sell-off. But hey, this market's been crazy. There's been a lot of sell-offs. So not to be surprised to see IBB do that. So AXON is a possible long here. Now, part of the strategy when you're buying a breakout stock is you're looking for candle over candle confirmation. You want that trend continuation to be confirmed by a candle making new highs over the previous candle. You don't want it to be making new lows. So, we know we made the right decision when we get that candle over candle movement, the trend continuation. This one we can kind of see here. It's trading sideways in this. It's really technically a bear flag, but there is potential for a long over the $18 area here. The volume on it's kind of light, only 330,000 shares traded, but technically this is very much a bear flag. Let's see if I can. Well, let's see here. See if I can draw this out here. You can see here's kind of the flagpole. Oops. Okay, so you can very much see that this is a bear flag. Man, this is definitely by no means a strong setup. It had a strong day-to-day, but again, I think this is in sympathy with what the broader markets were doing, with what IBB or the NASDAQ sector ETF is doing. So we're going to take a pass on this particular biotech. We're going to look for something with a stronger setup. This I'm not interested in. It's too cheap for me, not enough range, and it's clearly in a downtrend at the lows. There's really not much of any signs of recovery here. It's just a very strong downtrend for months now. Okay, SPHS. This is a very interesting setup. We have a big top here over this 187 area. Very cheap stock. It is capable of big moves. Now, if you look back here in November, we saw this thing pop all the way up to 380 on some news here, while it was trading down at 88 cents. Since then, it's kind of sold off. It is trading at a level where it could move fairly quickly. I like this for a day trade, but not for a swing trade. We'll keep an eye on this, for day trade potential. AMRI, another biotech here, put in a big green day, but it was after a massive sell-off here, and it's just at the lows, bouncing with the market today, so not interested in that. Twitter, same thing, not interested. Taser, same thing, just in a downtrend, puts in one green day. Now we're going to see a lot of these charts setting up very similarly because of what the market has been doing. It's so strong that everything is going to have been moving in sympathy for quite some time. So the whole process of building a watch list is to find stocks and not justify reasons to trade them, but justify reasons not to trade them. If you have 40,000 equities trading and they're all moving, whether it's 5 or 10 cents a day or $5 or $10 a day, all stocks are moving. And if you look at them, you can say, yes, I could have bought it here and I could have sold it there and I could have made 5 points on the trade and I could have retired and been rich or whatever. The point is you don't know what it's going to do, right? So it's pointless to think like that. And if you wanted to trade all 40,000 equities for the maximum of their move from the lows to the highs, then you'd be the richest person in the world and you wouldn't be watching my video. But more realistically, what you should focus on is the strategies that successful traders use and employ to maintain profitability over a long period of time. I want to talk myself out of more trades than I ever take, and I do this through this process. ROVI. I've traded this stock before. You can see I have some lines on it from when I traded it below the current area that it's at. This thing is what I would consider to be in a much more bullish trend. It is definitely shrugged off after this gap up here. It is shrugged off what the market has been doing the last few days. I think that this one has a lot more potential upside. There are earnings coming up on February 11th, so it really doesn't factor into any of our trading anytime soon. This one has room here let's take a look. So I'm zoomed out 2 years on this chart. I think that's probably far enough. We'll pull it up on the E-signal chart and see what it looks like. Okay. So let's use the E-signal chart. There's a little bit more data here on E-signal. All right, so this little guy has been trading here just above. We're at 18. It's at 1812 right here. So you can see this area has acted as long-term kind of support back in here. Definitely support back in October of 2014. It acted as resistance in June of 2015, and it's only just now getting back to this area. If ROVI can clear this 1840, 50 area, I think it probably has some decent legs to get back up to the $20 mark. How can I say the $20 mark? I say that is because I'm looking for that next major area of support and resistance. Now, sure, in between there's going to be lots of chop along the way, lots of smaller areas of support and resistance. But I really like this here long term, over a couple weeks maybe. Ideally, we're looking for 1 day to a week, but in the next couple weeks, this could definitely be back at $20. It's at 18 right now. It's not a stretch of the imagination to see it back at that $20.30 resistance mark. So I'm going to take a look here at the fundamentals. For example, we could take a look here at, let's see. We'll pull up Benzinga here real quick too. And we will take a look at the news on ROVI, see if there's anything of note. There has not been any news on this for the last few days. It's been trading at this area for a while, but no recent or breaking news on it. So I'm looking at Yahoo here. There's no recent headlines or anything of note. It's just a strong stock trading in a relatively strong pattern. So we're going to keep ROVI on watch over this top of this whole flag area. We're looking at it for a high of 18. See, 18 was the high there, and 1838 was the high here. So we'll take an entry over the high of this particular candle. It is 1838 right here. Oops. We'll take it over a high of this candle. We're looking for higher highs and higher lows, right? We want to see candle over candle trend confirmation. So anytime, anywhere between 1830, 1838, we can begin to accumulate a position at the under 1840. Ideally, for that breakout move back to that 2030 area. Again, why the 2030 area? Well, because it acted as support right here in December of 2014. It acted as support back here in April of 2014. It acted as support back in February of 2014. It acted as resistance back in August of 2013. So this 2030 area has been a very consequential number for this stock long term. And identifying those previous support and resistance spots is critical. Why is that? Because we know from my course, from trading, if you have been around at all, you will understand that previous resistance will become support and previous support will become resistance. Well, this is previous support at the 2030 area. Once it broke down through here last April, we have not traded above it. So we can expect previous support at the 2030 area to become resistance. This item will be on watch. Over 1830 to 1840. All right, so the next thing we need to do is find another stock to put on our watch list. I like to have anywhere from 3 to 5 names to choose from, particularly long and short ideas. So I look for stocks that have moved up at least 4% on the day of the scan. However, I'm also looking for good technical setups in combination with some decent fundamentals. Ew, look at Men's Warehouse. This thing was trading at $66 less than a year ago. It's down to $11. That is depressing. Don't want anything to do with that. So like I said, I like to have 3 to 5 names, both long and short, to put into play for potential trades tomorrow. Zyop, it's another reversal setup here. Just a biotech mover. Not interested in that one. FLWS, 1-800-Flowers.com. I am a customer, but I'm not a lover of this stock. However, this is somewhat of an interesting setup. We have a little double top right here. I mean, geez, it just made new lows here today. Popped up to 691. Has room to about, it's going to hit resistance at 712 and 733 from back in here. So not really interested in this one either. Moving on. I'm just going to plow through this. Now, normally it takes me, on average, 15-20 minutes to build out a watch list and send the email out to our followers, or my followers, my swing trade students. However, because I'm talking this out today, it's going to take a little bit longer. RCII, Rent-A-Center, been pummeled. This thing was trading, another stock, trading back at, just under $40 a couple months ago, last year, all the way down to 13 now. Pummeled. Okay, here's an interesting setup. I like this one a little bit more, as it is not directly off the bottom, not directly a reversal. What I like about this is that it's trading and closed just at the 20 EMA today. So very bullish pattern here. We got candle over candle confirmation. We were going to take a look here a little bit more in depth and see. Let me pull up some fundamentals on this thing. See if there's any news out on it. All right, I see no recent news on ENOC at this point. I'm looking here. I got nothing on the Yahoo news feed and nothing on Benzinga's news feed. So at this point, no news on ENOC, no bad news. Earnings coming up in February, late February. Let's do some analysis on this chart here. So where am I looking for long on this? This thing hit a high today at 368. Where are we going to have room to on this particular chart? We know there's a 34-cent ATR. So I'm looking for a move potentially back up to this 425 area, which was an area of resistance for a short period of time here. So I would expect probably a move to $4, then 425, 430 or so before slowing down. Now, if we can break over 430, we're going to start getting into the area of this gap. This particular gap region, this big sell-off here back in November would give us room back to $7. So that's longer term, though. Not really looking for a longer term play on that. Short term, I'm going to watch ENOC over the 370, 375 area for move back to 430. I think in the next 2 or 3 days. Not a big deal. I think that's very doable. Let me just double check something here. We'll pull it up on the old e-signal chart here, and I'll show you how. I analyze this, and I set my alerts here. So we'll zoom all the way out. Okay, we said over 370, 375. So I'll set an alert. I'm going to add an alert on this chart over 370, at or above on ENOC. And this will send me an alert, which will give me an opportunity to pull this chart up intraday, find an entry opportunity, and take a stab at it. Room here again is all the way back to the 430, 440 area. That's our target on this trade. So hopefully we get in this one and can hold it over the weekend. All right, so we have ROVI and ENOC. Let's find another long setup. NVIV. This is another reversal trade. KODK. Eastman Kodak, another reversal trade. Gas and oil and gas companies, I do not trade. Oil is very fundamentally heavy trading sector, commodity. I don't touch oil based stocks. If I want to trade oil, I'll trade the ETFs, like USO and DWTI. So this one is another sell-off, looking for a reversal. So a lot of these stocks you see are trading below the moving averages in a downtrend, and they're making new lows. Well, today the market gapped down huge, but kind of rallied toward the end of the day. So what you're seeing is a lot of these stocks making new lows for the first time in, well, this 2 years at least for this stock's history. This thing was trading at 25 bucks 2 years ago. It's down to $5 now. Made its 2-year low at least. I'm not looking at a longer term chart, but it's at least its 2-year low today. This is just not a bullish setup. There's no reason I would want to take a long on this. There's nothing about it that says this is a good buying opportunity for a breakout. Just because it moved up 4% today on high volume, it doesn't mean it's a good setup. Conversely, it's not a good short setup either. There's nothing about this that says it's going to continue going down towards zero. It could trade sideways here. It could move up. It could move down. It's just not a high enough probability setup for me to be interested in, so I'm going to pass. Remember, talk yourself out of more trades than you're ever going to take, and you'll be fine. This is no good. Again, same exact chart here. Big sell-off and a little curl at the bottom after making new lows. Not interested. Same thing. Not interested. All these are biotechs. Biotech has been getting hammered lately. Okay, this is a UAM is a healthcare stock, similar to biotech, but not biotech. This thing is trading at a pretty good level here. Very, very light on the volume, though. I mean, this thing only trades 158,000 shares a day, and if I wanted to take 3 to 5,000 shares on this, I'd probably have a hard time getting filled. The high today was 637, so I might watch this for a move over 640. Okay, so like we said earlier, we'll do our analysis. Previous support becomes future resistance, right? So this was a support area back in December. It is now acting as resistance. I can't tell you how often you see the same exact thing. Previous support becomes resistance. So if we can break over 640, I think we can get a move up here to the 675 area short term, and then after that we probably have a good chance of getting to $7. So this isn't a real high probability trade. It's not a real big mover. There's not a lot of room here, but I definitely think if we can get to about there, if we can get over 640, the next stop for this will be 680s, 675, 680. So I do like this for a potential long, and then after 680, let's see where we have room to. I mean, this thing is kind of all over the place up in here, but definitely going to be, I think longer term we have room to the 720 area, and I'll draw that line for you right now. Drop that down a little bit here. Boop. So you can kind of see it was a top back over here. Right about there. There's a top back in here. There's a top support and resistance here. Support here, support here. So 720, 730. So long entry here would be over 740. It's got a 30-cent ATR, so we'd probably put a, 640. It's got a 30-cent ATR, so we'd put a stop 30 cents away, 610. And we would look for that return to 680 and then 730. Okay, we'll flip through a few more charts, see if there's any more amazing setups here. Nothing that's really been truly just mind-blowingly awesome. That's because of the conditions that the market is in. I don't expect anything less. Here's a big bear flag, scenario. There's a bunch of tops here at this 280 area, 290 area. Well, decent room back up to 320 here, but it's just too tight and the volume's too light. Oil and gas, don't touch it. IDTI, using the 200 EMA as support. See, it's pretty clean support here. Right around that 2265 area, 2280. Lots of room to the upside here, but again, it's trading a downtrend below its moving average. This is not a bullish setup, so not interested in this. Another bear flag, not interested. Another sell-off, bottom bounce on that one. Okay, here's one that is moving up after a sell-off, higher lows. We're making higher lows, and closed just under the 20 EMA today. So this is STRP, Straight Path Communications. I've day traded this stock before. It's pretty easy to trade. It's 245,000 shares of volume, which is sufficient. We can find a long entry on this over $15. So for a move from $15, where's our potential target? Let's see here, the high. We'll put a little move right in there. 15.18 is actually the high. It's also at the 20 EMA. I think we can get in this a little bit earlier though. We'll probably get a move up to 17.70 short term. And then we'll see another move here, probably to 20.87. Realistically, let's see how this lines up long term. Oh, look at that, 15.17. Today's high of day, 15.17. Why is that high of day today? This is a resistance area because previous support from back in January of 2015, over a year ago, this was a support area. That's why previous support becomes resistance. Previous resistance will become support. So the next target here is definitely going to be 17.77. You can see it lines up here pretty well with the support area back in February. We might take a brief stop at 16.75, I would say. We'll probably see a quick stop in the road right about here. Either way, this is actually a relatively decent setup. It's got a lot of range. It's a big mover. And is definitely capable of big moves when volume comes into it. So I like the setup. I'd give it a little bit of room. We'll watch this one for a potential long, STRP. This will be a long over 15. I think we can get in this over $15 to 15.17, and we'll put our stop at 14.50. Right, we'll give it 50 cents of room, and the target here is going to be first stop is 16.75. And then 17.75. That's not a bad looking setup. Not the worst thing I've ever seen. Continue on. AGEN, another biotech sell-off. Looking for a bounce here. Century Casinos, no good. Just a dirty chart. Oil and gas, dirty chart on this one. Oh, another dirty chart. Wriggle. Oh man, this thing's been on the radar a few times lately. Just another bear flag trading below every moving average it has. Not interested. Another sell-off here. Not interested. Another sell-off. Not interested. Just these are all crappy setups. A lot of biotechs hitting. A lot of oil and gas hitting. Another bear flag. Not interested. Just nothing here that's appealing. We're getting into this 5%, another bear flag, getting into this 5%. You see all these same patterns, every stock. Because if they don't have a catalyst, they're going to drift with the market. They're going to trade in sympathy to what the rest of the market is doing. If there's nothing to say that the stock should be going up, then it's just going to move down. And that's why every single stock looks the same. Just a big sell-off below the moving average over the past couple of weeks, because that's what the whole market's done. This is not surprising at all. And this is why swing trading has been very difficult so far this year. I'm only taking a few trades, still profitable on the year, but by very small margin. Day trading is where it's at the moment. If you're holding through market gaps of 50 points from day to day, it's pretty intense. So definitely want to mind your risk here and trade very small on your swings if you're going to end up holding things overnight. Okay, so went through most of these and definitely not interested in many of the setups we labeled off. The three that'll be on, or four that'll be on watch: ROVI, ENOC, UAM, and STRP. So that's how we came up with the long stocks to watch for tomorrow. Now, in the event that the market is weak again, we're going to take a look here at our short opportunities. This is the exact same scan. It is just an inverse. It works the same way. We're looking for a breakdown under support with a candle under candle confirmation of the downward or bearish trend. So looking at all these stocks here, like this one today, kind of gapped down with the market below the 200 EMA, and it's definitely in no man's land here. This thing has put in a pretty big move already. It's down from 32 bucks. It hit a low of 29 bucks. It's down 3 points in 2 days. It's not trading near the lows. We want stocks that are going to be trading near the lows, just like on long stocks. We want them trading near the highs of day. This is trading midway in its range today. So the buyers came in at the end of the day and pushed it up. We want to see something that's sold off at the end of the day, much like this. This is much better looking. Okay, this stock opened up, sold off all day, and closed just off the lows, blowing through the 20 and the 50 EMA for the first time in months. Since September 2015, this thing has not traded below both moving averages. This is a weak setup. It's also a $240 stock with a 5-point range, but it's very liquid. It trades 1.3 million shares today. This is a decent short setup, although expensive, potentially under 239.51. This is a little outside of my average price range. However, I will keep this one on short watch. Okay, I need to check the news on this real quick. PSA has earnings coming up middle of February. Very strong trend, but unfortunately, this is just not going to do. It's kind of flat topped out here over this 250 area. It just could not break out. And so short sellers sniffed weakness. Long buyers from down in here said, okay, screw it, the run is done. They sold, and this is why we're getting this breakdown here. Looking for a move back down to previous resistance. So we should see a move back down to 235 in a hurry here. I think we'll see a move to 235 in a hurry. That's the target on this trade. So we'll take a short on this under the low of day, candle under candle, 239.51. We'll take a short entry on for a move down to 235. So that's our entry to our exit. And we'll put a stop back here. We'll give it a couple points of room. We don't need, this thing has a 5-point ATR. We don't need to wait 5 points to find out we picked the trade wrong. So we want this thing to go and continue right away. Obviously, we want the market to remain weak when we enter this trade. So this thing remained weak all day. Closed near the lows. We want to see the same kind of price action tomorrow if it's a weak market. And we'll catch that sell-off. And hopefully we'll lock up 4 or 5 points there. All right, also going to continue looking here for decent short setups. Oh, poor PB. That has just been absolutely hammered. Just a dirty, dirty sell-off, but I'm not going to chase it to the downside. We got, this is EXR. It's another real estate investment trust. REITs got hit pretty hard today. This one, unlike the last one, did not close near the lows. Closed up off of them by about 1.5 points. So not the weakest setup I've ever seen. Here's a gap down that couldn't hold the lows. This is a hideous chart of an oil and gas company. This is oil and gas, Chevron or Exxon. Here's a stock trading sideways, a utility stock. It's an energy play, not interested. Telecom, not interested. Another REIT, not really interested. You know, you can go through these pretty quickly here and see that there's just not a lot of opportunity. And that's how we become selective. This is a nice little double bottom here. We have this tap at 28.80 or so back in December. We have another couple taps here in early February, and then today we finally have the breakdown below, but it recovered right at that level of the initial taps around that 28.80, 29 area. So this one has room if it wants to start filling the gap all the way back down here to 27.47 or so. You can see under this particular support area and this particular resistance area. The stock attempted to fill that gap today. It did, but it could not hold up. It can definitely resume course and make a move lower tomorrow back towards that 27.50 area. But the fact that it couldn't hold that area today and got bought back up tells me that this is stronger right now than it is weak. Okay, here's another one trading just off of long-term support. You're going to see this correlation over and over and over and over and over. So support back in July 2014, support back here sort of on October 2015, and definitely support right now. If we can get a breakdown under this area here, the lows being 31.07, so under 31 bucks, I think we can get a quick move down to well, let's see, what's this low back here? We got low of 30 bucks, potentially all the way back down to 28 bucks. This is kind of a slower mover. It is a business, let's see, it's in the business services industrial sector. This is trading sideways, but only really recently starting to lose it. Let's check the fundamentals on this. Let's see if there's any news out. We're going to check Yahoo. We have earnings coming up on the 4th of February. That doesn't really factor in at this time for a swing trade. And we're going to check Benzinga for any kind of recent news on it. And we don't see anything going back to December 17th. They named a new CFO. So this looks like a good short setup for me under $31. I like this for move down to the $30 area. It's only got $1 ATR, so it's only going to make about a point move at a time. So we can say definitely that we get short at 31. We look to cover around 30, and then potentially we get to move back down to 28. We can keep scaling out on the way down. Now, if you're a swing student, you'll know the strategy. We look to take profits every 3 to 5%. We look to adjust our stop, so you'll understand how to trade this. But for everybody else, short entry here on this one, I'm looking under $31. I'll put my stop here at $31.50. Definitely going to have room down to 28 short term from back here, $29.90 from back here on May of 2014. Really hasn't been trading in this range at all since then, so it'll be interesting to see what happens. So I like to have I'd like to have this one on watch here, CATM. Okay, this is a good example of why you have good shorts and long opportunities on the watch list. You don't know what kind of day you're going to get, but you want to capitalize on whatever the market gives you that day. So we have trades ready to go short, we have trades ready to go long. Sometimes we do both in one day. It all depends on what the market gives us. But I'm going to set my alerts in here for the different stocks. I'm going to set them an E signal, and I'm going to let them fire off tomorrow morning, and I'll evaluate the setup at that time with the market conditions, and I'll make a trade and I'll alert it to our subscribers, and we'll make some money. That's certainly the goal. If not, we'll stop out on minimal size and risk. If you guys have any questions about how I swing trade, or how I am analyzing these stocks, or the tools that I'm using, you guys can email me anytime, day or night, jeff@warriortrading.com. More than happy to go over this stuff with people, kind of give a better layout or a better understanding of the process. It is a complicated process, but it does not have to be. If you have that good educational foundation, you can definitely be a profitable trader, and this will make a lot more sense to you. And this video has gone on about 40 minutes now, so I'm going to try and wrap it up. It is definitely not how long it takes me to make a watch list. I can do this in 15-20 minutes, but like I said, because I was explaining everything today, it took a little bit longer. This is something you guys can do in a very short amount of time on a lunch break at work. Set up your watch list for tomorrow, and set up your orders the night before, and get in these trades and trade profitably, make extra income. You can do this full time like I do. You can learn day trading, swing trading, investing, whatever it is you want. It's all about the education and having a good mentor, and having confidence in what you do ultimately. So look for a blog post. I'm going to attach this video to a blog post at warriortrading.com. As well as put it out on social media and things like that. So if you haven't already, make sure you check out my swing trading course, chapter 3 that I released, so you guys can get some education, some idea, some understanding of a lot of the stuff you heard me saying and talking about today, and how I swing trade, the things that I look for, the tools that I use. Other than that, like I said, you guys have any questions, reach out to me, jeff@warriortrading.com. Everybody have a good night and trade green. Take care.